Good morning, friends. Okay, let's continue with the discussion. We were doing mutual funds. I'll quickly summarize what we did in the previous session. We learned that mutual fund is an important instrument for long term wealth creation. Here, as a structure, there is an AMC which manages the investments. There's a fund manager who sits on top of the AMC. There's a trustee who ensures that you work in the best interest of the unit holders, are technically called as investor. Whenever an investor is entering into a mutual fund, there could be some expenses which are incurred by the MF initially during a new fund offer called as initial expense ratio. Continuously, there will be expenses incurred like rent, salaries, electricity, everything would be incurred, which is technically called as your annual expense ratio. And we learned that there is a link between the MF return and the own return. The own return of the investor, if I want to earn the same from MF has to earn more, and the formula was MF return is equal to own return divided by 1 minus initial expense ratio plus annual expense ratio. This was the initial calculation. In case there is an opportunity cost element available, then I cannot use the formula approach. I'll have to go through a cost benefit analysis where benefits are going to be whatever returns you generate, but one opportunity cost can be there, or a gain can be there. Gain in case of MF investing, opportunity cost in case of own investing, which is your loss in professional income of the person. Then the next thing which we saw was holding period return versus the annual return. Holding period return is basically the return which I generate irrespective of the time period of investment. Simple formula, what I get back minus what I give divided by what I give. What I get back is NAV1, D1, CG1, everything at the end of the year. NAV1, D1, CG1. What I give today is called NAV0 divided by NAV0 into 100 to express percentage. You want to bring it annual return. In case you want to do an annual return, then you will have to multiply with 12 by M. Multiply with 12 by M. This is what we broadly saw in the previous session. We'll be continuing with that discussion. Any doubts on any of the points in the previous session? Okay. Okay, let's continue now. I'll do straight away few questions and then I come back to concepts if needed. So let's go back to question bank. Question 3. Question 3. A mutual fund that had a net asset value of 20 at the beginning of the month made income and capital gain distribution of 0.0375, 0.03 per unit respectively during the month, and ended the month with a net asset value of 20.06. Compute monthly return and annual return. A straightforward simple question just to get started with. Now, in the previous session, I had talked about something called as D1 and CG1, and I said CG1 is dividend only. I'll explain this now. Listen, when I invest, I get three income. One is called capital appreciation. One is called capital appreciation, which is called NAV1 minus NAV0. NAV1 minus NAV0 is technically called capital appreciation. There's another income which is called D1, CG1. The mutual fund. What does a mutual fund do? I collect money from all of you. I do investment in ICICI Bank, HDFC Bank. I invest in multiple companies. Those companies will be declaring dividends, and sometimes I may sell the shares of that company. I am the mutual fund owner. I am the mutual fund manager. What I am doing is I am investing in multiple companies. When I make these investments in multiple companies, at some point of time, I will exit out of that company. When I exit out of that company, I will be earning capital gain. As a mutual fund, I will earn capital gain. I'll realize the capital gain when what? If I sell the underlying shares which I'm investing in. A mutual fund can invest in shares, can invest in bonds, can invest in debentures. So if I'm investing in shares or bonds wherever, if I earn any capital gain and declare dividend out of that capital gain, declare dividend out of that capital gain, it is called CG1. Declare dividend out of that capital gain. Declare dividend out of my dividend income. Declare dividend out of my dividend income is called D1. Declare dividend out of my dividend income. I'll explain again. Mutual fund, the role of the mutual fund is to invest in multiple companies. Company 1, company 2, company 3, company 4. This gave dividend, this gave dividend, this also paid dividend, and fourth company also paid dividend. This I was holding for 1 year. Second year I also hold, they keep paying dividends. Whatever dividends I generate, if I declare any dividend out of this dividend income, it's technically called D1. And at some point of time I will buy and sell the shares of the C1, C2. I bought already. At some point of time I will sell it. If I sell it, I make realized capital gain. I make realized capital gain. Whatever capital gain I make, this capital gain income, I may pass it on to you guys. That is called CG1. Practical world, there's nothing like D1, there's nothing like CG1. They just call it as ICW, income and capital and dividend withdrawal. That is the technical name in the practical world. There's nothing like dividend 1 and CG1. But I can't help it, ICI material does still talk about these two terms. For every analysis purpose, D1 means dividend, CG1 also means dividend. D1 means dividend, CG1 also means dividend. Both are dividend. There's no difference. There is no difference between D1. There's no difference between CG1 for all our analysis purpose. So whenever I see a question with capital gain distribution, you can call it as dividend distribution. Capital gain distribution is nothing but dividend distribution. And if they say income distribution, again dividend distribution. Sometimes a mutual fund will invest in bonds. There the income is interest. For them the income is interest. I am now distributing the interest to you guys. I can distribute interest to you guys. I can distribute rent to you guys. I can distribute capital gain to you. And there's something called as REIT, where I get rental income. I may distribute rent also to you. Whatever I distribute, my purpose is I earn something, I have to pass it on to you guys. That is technically called dividend. ICA may use the term D1, ICA may use the word CG1, ICA may use the word rent distribution, interest distribution, capital gain distribution, dividend distribution. In any form, if I give the income which I earn to you guys, it is technically dividend. Clear? Any doubts on this? Let's write monthly return is equal to NAV1 minus NAV0 D1 CG1 whole divided by NAV0. What I get back minus what I give. NAV1, NAV0, D1, CG1 whole divided by NAV0. What is NAV1 is end of year, technically here end of month. In this case we are doing monthly calculation. What is the closing NAV? 20.06. Opening NAV 20. Dividend made an income distribution of how much? 0.0375 and capital gain distribution of 0.03, 0375 and 03, 0.0375, 0.03 whole divided by 20. Live online guys, you can type the answer in the chat box. I'll be checking your comments now onwards, so you can type it there. 20.06 minus 20 plus 0.0375 in plus 0.03 divided by 20 into 100. Let me know the answer. 0.6375 percentage. 6375 percentage. Live online guys, please start typing. Okay, 6375 percentage. Any doubts on this? Clear? Can we proceed? This is your monthly return. The monthly return is how much? 6375 percentage Technical name for this is holding period return. What is holding period? Is return for the period which we hold the mutual fund. Return for the period which we hold the mutual fund. You can hold it for a month, you can hold it for 2 months, you can hold it for 10 months, you can hold it for 15 months. That's your wish. Without doing any 12 by M in the formula, that's technically called holding period return. Here it is technically called monthly return because our holding period is 1 month. Holding period is 1 month. Then they've asked also what? Annual return. Next, annual return is equal to holding period return into 12 by M. Holding period return multiplied with 12 divided by number of months. Multiplied with 12 divided by number of months. I've got the answer in live online. 0.6375 percentage into what? 12 by 1. 12 by 1, 7.65 percentage. A fairly simple straightforward calculation just to get started with. 7.65 percentage. One item which we are yet to explain is what is NAV calculation. All that you will understand as we proceed. Any doubts on 7.65 percentage? Can we proceed? Clear? You can put the tick in the question, okay? Whatever you wish to put the tick there. Okay, I'll move to question 4 now. Following information is extracted from steady mutual fund scheme. Asset value at the beginning of the month, annualized return, distribution in the form of CG and income. Distribution in the form of CG and income. Calculate the month end NAV of the MF scheme. Limit your answer to 2 decimal. Provide a brief comment on the month end NAV. Brief comment on the month end NAV. Go through the question. I'll give you a minute. Nothing much, but still a minute for you. Go through the question. Okay, I'll explain the question and then we start doing it. Asset value at the beginning of the month, that is called NAV 0. Net asset value at the beginning of the month, NAV 0. Annual return is given. Distribution in the form of CG and income. CG is called CG1 and income distribution is called D1. Calculate the month end NAV of the MF scheme. What is this type of question called? I had explained in the previous session. This is reverse working. You normally calculate 15%. They have given you 15% and our work is to go ahead and compute the NAV at the end of the month. NAV at the end of the month. Limit your answer to 2 decimals. Now listen. Many places, as I change the decimals, my answer will undergo changes. If you work with 2 decimals sometimes, 3 decimals sometimes, 4 decimals sometimes, answer will undergo change. When to work how many decimal will become little tricky at places because you don't know. I'll sometimes say 2 decimal, sometimes I'll say 3 decimal, sometimes I'll say 4 decimal. In my material, I have mentioned how many decimals at most of the places, but still there can be places like last question we did 0.6375 percentage. Why to do 4 decimal? Why can't I do 0.64? So most of the exam question of late will tell you how many decimals you have to work with. If they mention 2 decimal, you're forced to do only 2 decimal. Don't do 3 decimal there. Unfortunately, if you increase or decrease the decimal, they are not awarding marks. They are not awarding marks for that question. So don't try to do anything different. If they give you number of decimals specifically in the question, we will have to follow that only from the solution point of view. In case clarity is not there on number of decimal, as we proceed, I'll give you some clarity how many decimals we work with. See, practical world, number of decimal depends on how material it is. Some financial statements, companies give it in normal numbers. Some they give it in thousands. Some financial statement are in lakhs. Some financial statement are in crores. It all depends on what is the materiality level. So an ITC company or an ICICI bank financial statement, giving it as normal number will not make any sense because reading that numbers will be difficult. So there we give it in crores. Sometimes I may give it in lakhs. As you would have done audit of companies, you would have understood that the financial statement which you finally present, sometimes it will be in lakhs, sometimes it will be in crores, sometimes it will be in thousand. For you, no problem, because you will see what was done in the last year. Mostly you'll follow that from a practical world point of view. But still, in an exam situation, should I solve a problem in lakhs, should I solve a problem in crores, should I solve a problem as normal numbers, should I do 2 decimal, should I do 4 decimal, should I do 1 decimal? All these are normally problems for students. They face difficulty with this area. Normally they don't know how many decimals should they work with, and because of which many times marks are deducted. I at least don't believe Aisha should do that, but still there have been situations where students would have written 2.495, their solution could be 2.50. Ideally both are same only, but if they've said 2 decimal, I have seen paper where they have not awarded marks. Well, not awarded means they've deducted 2 marks or 1 mark for that small not rounding off done. At least I don't see that to be a bigger problem, but still I'm making it very clear in this session itself, because here 2 decimals are given. We will give our answers in 2 decimal. If they talk about 4 decimal, we'll give our answer in 4 decimal. In case they don't talk about number of decimal, as we proceed you will get clarity on how many decimals do we work with. Can I change the number of decimal if they have mentioned something? Strict answer, no. One good part, 30 mark this headache is not there, because for 30 marks we are doing MCQ. In MCQ, if you get an answer closer, you'll obviously put a tick around that number and then close it. So 30 marks this headache is removed. The headache is only there for the descriptive area. In that, 14 marks is anyway going to be theory. So as such this headache is reduced to a greater extent. Why I say this is headache is because this is not testing my concept clarity. If it was testing my concept clarity, I would have been okay with it. Writing 2.495 or 2.50, ideally I would expect ICI to give me marks, because I have done my job. I just did 3 decimal, solution said 2 decimal, and because of that deducting marks doesn't make sense. So at least I wouldn't want them to deduct marks, but unfortunately in the past institute has been very strict. One reason is AFM of late, and even from the time I've been teaching, becomes a very easy paper in exam. Moment it becomes a very easy paper in exam, obviously they'll have to touch something, because if it's a easy paper, evaluation will become tougher. If it's a difficult paper, which has happened few times, it's not that difficult paper has not come. Few times difficult paper has come. Whenever difficult paper has come, ICI on the evaluation side they make it little easier. They give some grace marks to student. All that happens because many students worry, saying that whether the paper is going to be tough or the paper is going to be easy. Doesn't really matter from our point of view, because if it's an easy paper, they expect perfection in your answer. If it's a difficult paper, they'll be okay with your 2.495 becoming 2.46, 47, 2.5152, somewhere around there. They may end up giving marks, because they'll tell the examiner don't go very strict on the evaluation side. So to cut it very short, if decimals are given in the question, please do properly whatever workings they're talking about. 2 decimal will restrict to 2, 3 decimal will restrict it to 3. Also, any reverse working question, once we are done with the answer, we will cross check the answer. What is cross checking? You'll understand as we proceed. Now let's write. Annual return is equal to annual return is equal to annual return is equal to NAV1 minus NAV0 D1 CG1 whole divided by NAV0 whole divided by NAV0 into 12 by M into 100. 12 by M into 100. NAV1 NAV0 D1 CG1 whole divided by NAV0 12 by M into 100. Now listen, anytime you work with percentage, be little cautious, okay? If we do into 100 in the other side, mathematically the number will be 15 and not 15 percentage. In the calculator, you'll be getting 1.5. You don't get 1.5 percentage. If you do into 100 other side, this side you should write 1.5. Don't write 15 percentage. If you write 15 percentage, you'll end up getting a wrong answer. If you do into 100 in the other side, this side you should write 1.5. If you don't do into 100, then you should write 0.15. 0.15. That's your wish, whether you want to do into 100 or you don't want to do into 100. Because when you do a forward working, all these things don't come into your mind, because your calculator will say 15, you will write 15 percentage and leave it. But when you do reverse working, these percentage calculations sometimes lead to mistakes. I'll repeat again. If you do into 100 in the other side, calculator will give you answer as 1.5. It will not give answer as 1.5 percentage. So if you are doing into 100, this side write 15. If you are not doing into 100, write it as 0.15. Write it as 0.15. Don't write 15 percentage. Into 100 and write 15 percentage, you will end up making a mistake. Clear? Now let's do this. Annual return. What's the annual return given? 15 is equal to NAV1 is what we are calculating. NAV0 is how much? 65.78. D1 is 0.32. Doesn't really matter. 0.32 is D1. Capital gain distribution is 0.50 and income distribution is 0.32. Doesn't really matter whichever order you write. 0.32 and 0.5 divided by 65.78 into 12 by 1 into 100. 12 by 1 into 100. Any doubts on this? Clear? Do the calculation. 15 into 65.78 divided by 1200. 12 into 100 comes this side. 15 into 65.78 divided by 1200 is equal to NAV1 65.78 0.82. 5199 vehicle 2599. Anyone's vehicle 5199 2599. Can you just repark? 65.78 0.82. Clear? Get me the answer for NAV1. Get me the answer. 15 into 65.78 divided by 1200. Two decimal answer will do. Point. Yeah. What's the answer you said? 65 point. 65.78. Clear? Our opening in NAV is also 65. Closing is also 65 in this case. Both are same 65.78. Any doubts on this? Any doubts on the calculation? Okay. Just to be doubly, triply sure, because anytime you do a reverse working, mistakes are likely to happen. Reverse working question, mistakes are likely to happen. Any doubts first on 65.78? I keep saying this, mistakes will happen, because students have made mistakes. So be little cautious about these places in the calculator. Your answer, okay, 65.78 minus 65.78 plus 0.32 plus 0.50 divided by 65.78 into 12 divided by 1 into 100. 14.96 percentage, which is 15%, which is 15%. Answer. Once you are done, do a forward working, unless the forward working is a time consuming calculation. If it's a time consuming, avoid it. Otherwise, any reverse working calculation, once we get the answer, we will do a forward working. We'll do a forward working. Any doubts in this? Any doubts on this? Clear? Can we proceed? Any doubts on 65.78? Calculate the month end NAV. Limit your answer to 2 decimal. So we have done 2 decimal. Practical world. NAV goes through 3-4 decimal. It can go to 3 decimal also. It can go to 4 decimals also. So that is the practical angle. Any doubts till this? Provide a brief comment on the month end NAV. I cannot give any big comment on this. Only thing I can do is I can compare opening and closing. They gave this in May 24 exam also, where the NAV went up little bit. It was a reverse working question. This was a study mat question. In exam, obviously they changed the numbers. So there 65.78, let's assume, is opening. Closing became some 67, 68. They said NAV increased by so much. That's a very simple comment they passed. I cannot comment anything else here. I provide a brief comment on the month end NAV. I can just do a comparison of opening NAV and closing NAV. No other comment I can pass. There is nothing else I can do. No other analysis can be done. So you can write the NAV comment. Yeah, there is no change. There's no change in the NAV. There's no change in the NAV. No change in the NAV. Clear? Done? Able to understand this? No change in the NAV. Any doubts on this? Not a very big question, but still I give you 30 seconds. Go through the solution. You want to make some notes, make it, put your comment, do your taking part, okay? Okay. Let's now move to the next concept. Dividend payout versus dividend reinvestment. I'll be coming back to earlier concepts later, okay? Dividend payout versus dividend reinvestment plan. Now, a mutual fund, when it declares dividend, I can do two things with the dividend. Either get it paid out or do something called as reinvestment. What are these two? What happens? Let's understand. Let's first spend little bit time on dividend. Okay, listen. Whenever a mutual fund declares dividend or a company declares dividend, there are 3-4 terms which are related to dividend. There's a term called dividend rate. There's another term called dividend yield. There's another term called dividend payout ratio. I'm talking from a corporate point of view, okay? Then I'll link it to mutual fund. There are multiple terms. One is called dividend rate, second is called dividend yield, third is called dividend payout ratio. Dividend rate means multiply on face value. Dividend rate is multiply this rate on face value to get something called as how much is the dividend declared. You may note this, okay? I think may not get covered fully here. It is covered, but still note it down. Dividend split into three: dividend rate, dividend yield, dividend payout ratio. Rate, yield, and payout ratio. Dividend rate is multiplied with face value. If you follow corporate announcements, they'll say we are declaring 5,000 percentage dividend, 1,000 percentage dividend, 100 percentage dividend, 10,000 percentage dividend. Reason is TCS, whose share price could be some 2,000, 3,000, face value could be 1 rupee or 10 rupee. So if you buy a 10 rupee face value share, on this they'll declare 2,000 percentage dividend, not 2,000, 200% dividend. 200% dividend will be 20 rupees, and I'll get 20 rupees on 3,000 rupee investment, which is insignificant. 20 rupees on what? 3,000 rupees of investment. One share price is 3,000. Corporate, what they'll do? They'll say we are declaring 200% dividend, 500% dividend, 1,000% dividend. We may think we are getting that. No, you're not getting 200%, 500%. It is on what? On face value. Today, go and see any dividend declaration of any company. They'll say these percentages very happily: 500%, 1,000%, 2,000%. This is on face value. First thing is on face value. Second thing, I want to know, did I earn that much, which is called dividend yield. The company may say that they are declaring what? On face value. Dividend yield is on market price. dividend yield is on market price. One is on face value, second is on market price, and payout is on something called as earnings per share. I'll explain all the three again: face value, MPS, and EPS. Now let's take an example. TCS declares a dividend of 100 rupees. 100 rupees, if they want to calculate dividend rate, 100 divided by face value 10 rupees into 100, 1000 percentage. 100 divided by what? Divided by the face value, divided by the face value, and they'll say we are declaring a dividend of how much? 1000 percentage. 100 divided by 5000. 5000 is the market price. 5000 is the market price. Technically, I earn 2%. I'm earning 2%. Company will say they are declaring what? 1000%, and we are earning what? Only 2%. Is this happening in the practical world? Exactly this happens. Exactly this happens in the practical world. Their declaration of dividend. Let me see if I can show you a TCS dividend rate 2025. Okay, I have, just give me, if I get the percentage, I'll show you the percentage. Directly the dividend rupees is there, percentage is not there in the screen, but normally they'll declare the percentage. They'll declare the percentage. What is this? Is a report by Money Control, but if I open the TCS declaration, they'll declare a percentage. The percentage will always be on face value by them. The dividend percentage will always be on face value, but what I ultimately earn is on my market price, is on my investment value. And there's a third thing which is called payout ratio, which is 100 rupees on an earning of 400 rupees. So you can say, you can write this in a minute, okay? 1000% dividend rate, 2% dividend yield, 25% payout ratio. 25% payout ratio. Write these numbers: 100 by face value, market price, and by EPS. Divided by face value, divided by market price, divided by earnings per share. Why am I talking about this? If the question say dividend rate, in order to calculate the dividend 0.5, 0.32 which they gave, no, you have to calculate it. You will multiply with face value. If they say dividend yield, you have to multiply with market price, technically NAV. Technically NAV. They may not give payout ratio in mutual fund chapter. Payout ratio will come when I go to your security valuation chapter. The dividend can be expressed in three ways: as a percentage of face value, as a percentage of market price, as a percentage of earnings per share. What really matters for me is market price, but companies purposefully will give it on face value. They'll give it on face value. That's how they'll declare. You can't do anything about it. So on face value will be there, on market price will be there, on earnings per share will be there. Any doubts on the three numbers? Is this only for this chapter? No, I may discuss this after 20 classes. After 20 classes, suddenly I'll say dividend rate is given, dividend yield is given, dividend payout ratio is given. If they say payout ratio, multiply with earnings per share and then tell me dividend per share. If they say dividend rate, multiply with face value and then tell me dividend per share or per mutual fund, whatever it is. And if they say dividend yield, we multiply with market price, where you have two options. You can do opening market price, you can do closing market price. That is okay. That is a debatable issue. But otherwise, there are three terms. The three terms are: one is on face value, which is called dividend rate; second is on market price, which is called dividend yield; third is on earnings per share, which is called payout ratio. All these three terms you have learnt at CA Inter. You have learnt at CA Inter, but maybe you may remember, you may not remember. So I have put it at one place. Any doubts first on this? Okay. Now coming back to the concept, dividend declared by mutual fund, in bracket I've written what? Dividend rate into face value. This is what I used to teach always. In one exam, ICA gave dividend yield. In one exam, they gave dividend yield where you have to multiply with the NAV. You have to multiply this with the NAV. I have been teaching this only from the beginning. But suddenly in one exam, they use the term dividend yield. I'll show you that question later, okay? Dividend rate into face value. Up to option. Dividend payout plan, pay it in cash. If you pay in cash and I want to calculate return, NAV1, NAV0, D1, CG1 divide by NAV0, do into 12 by M, do without 12 by M, depending on whether you want holding period return or the annual return. This is if I pay you dividends. If I pay you dividend, and the formula ignores time value of money. Formula ignores time value of money. In this entire calculation, we are ignoring what? Time value of money. NAV1, NAV0, D1, CG1 divided by NAV0 into 12 by M into 100. There's a second option which is called dividend reinvestment plan. What is dividend reinvestment is, I pay dividend. I do not give it to you in the form of dividend in your bank account. What happens is, MF declare dividend. Moment I declare dividend, you want to get 1000 rupees. You are eligible to get rupees 1000. I ask you two things. Do you want it in cash or other than cash? What is other than cash is, instead of giving you 1000 rupees, I'll give you extra 20 units, 30 units. Units is, you are the owner of the mutual fund and you are holding on to the units of the mutual fund. You are holding what? Units of the mutual fund. Instead of giving you 1000 rupees in cash, I can pay. I gave you 1000. You gave me back 1000. You gave me back 1000. I gave you 1000. You immediately returned 1000. I divide this by the NAV. I divide this by the NAV. What is NAV? NAV is the value of the mutual fund today. So I divide by the NAV and give you extra 20.45 units. Units can be in decimal here, okay? Units can be in decimal in mutual fund. So instead of giving you what? Instead of giving you 1000 rupees, I'll give you what? 20.45 units, 30.45 units, 40. I'll give you some extra units. If this happens, my earlier formula cannot give me annual return. What is earlier formula? NAV1, NAV0, D1, CG1 divide by NAV0 into 12 by M into 100. Why can't it give the answer? Because that assumes the opening units and the closing units will remain same. That formula assumes the opening, if you start with 1000, you have to end with 1000 units. If you start with 1000, you have to end with what? 1000 units. That's the assumption of that formula. That's the assumption of the formula, that if you start with 1000, you'll have to end with 1000, which obviously may happen, may not happen, may happen, may not happen. Why it may not happen? Dividend reinvestment. Dividend reinvestment. Then what is the formula? Formula remains very simple. What I get back minus what? What I give divided by what I give. In this formula, what I get back is closing units into closing NAV. Closing units into closing NAV. What I give is opening units into opening NAV. Opening units into opening NAV. No dividend income, no capital gaining. I don't get anything. I don't get anything. What are we going to do? Closing units into closing NAV. Opening units into opening NAV. Closing units into closing NAV. Opening units into opening NAV divided by what I give is opening units into opening NAV. In case in the interim period no dividend was paid out, no dividend was reinvested, no way, no problem, you use the formula. What is the formula? NAV1 minus NAV0 D1 CG1 divide by NAV0 into 12 by M into 100. Are both formula different? Technically they are same. Formula is same. What is formula? What I get back minus what I give divided by what I give. There's no difference in both the formula. So I teach it as two different things. There's no difference in both the formulae. Technically, both are same. Dividend payout plan paid in cash. Return computed using what? Formula of concept 2. Using formula of concept 2. In concept 2, the formula will be there, and you know the formula. NAV1 minus NAV0 D1 CG1 divided by NAV0 into 12 by M into 100. 12 by M depending on whether you want holding period return or annual return. If you do reinvestment, this formula cannot help me. This formula cannot help me. Reason is, when I start with 10 units. When I end with 11, 12, 13, 14, 15, 16. And in the process, dividend is not my income. Capital gain is also not my income. D1 is also not there. CG1 is also not there. Why not there? Because it does not come to my bank account. It is not even coming to my bank account. What happens here? You are just paying out. It does not come. Again, I'm repeating, it does not come to our bank account. Clear? In the practical world, if at all this happens today, if your dividend is 1000, reinvestment will only be 900. Reason is tax deducted at source. This is practical world. There will be a tax deduction at source by the mutual fund. This is more from a practical world point of view. Nothing really matters for you. In the practical world, if there is a reinvestment plan, I declare 1000. You are eligible to get only 900. Reason is, income tax tells me to do TDS deduction, could be 10%. I'm not getting into the percentage discussion and all, but there'll be a TDS deduction and you'll reinvest only 900. Whatever I'm talking about practical world is not going to matter in problem solving. Just I'm giving in between, I'll keep talking about the practical flavor just to get you some extra understanding. That's all. So in the practical world, if 1000 is declared, you can reinvest only 900, 800, 700, 600 depending on the TDS rate. TDS rate will be 10%. It will be 10% mostly. Any doubts on this? So let's do a question around this. Let's see this. Mr. X invested 1 lakh when NAV was 10 per unit. Fund declared income distribution of 2 per unit, capital gain distribution of 3 per unit. These amounts were reinvested at NAV of 20 per unit. Reinvested at NAV of 20 per unit. Closing NAV 30. What is the rate of return earned by the investor? I'll take you through this calculation and then we will do a descriptive real problem. This is an MCQ question. Same thing we will do as descriptive. Let's read it again. Mr. X invested 1 lakh when NAV was how much? 10 per unit. Fund declared income of how much? 2. Capital gain of 3. There is one option. Whenever they declare this 2 and 3, I can take it to my bank account. That is called dividend payout plan. Taking it to the bank account is called what? Dividend payout plan. What is the other option I have? Other option is reinvestment. Other option is reinvestment. I have two options. One is payout. Second is reinvestment. One is payout. Second is reinvestment. Same example. Let's assume it is payout as of now. It is payout. When it is payout, I don't want to know whether you invested 1 lakh, 10 lakh, 2 lakh. I just want to know NAV1, NAV0, D1, CG1, NAV0, 12 by M if at all needed. Without 12 by M also I can do depending on the data. Here I don't know the period and all, nothing I have added in the MCQ example. So first let's calculate payout plan. What is payout? NAV1, NAV0, D1, CG1. In the calculation, it does not matter whether you invested 1 lakh, whether you invested 5,000, whether you invested 10,000, or whether you invested only one, that is 10 rupees. Whether you have invested 10 rupee, 1 rupee, 1 lakh, 10 lakh, does not matter in which plan. In the payout plan for return calculation. Now write return. Example 6. Example 6. Return of dividend payout plan. That is not asked in that example. I'm doing it. Okay. Return of dividend payout plan. Dividend payout plan. NAV1, NAV0, D1, CG1, divided by NAV 0 into 100. No 12 by M. Okay, all that is not there in the question. Into 100. NAV 1. What is the closing NAV? 30. Opening 10. Opening is 10. D1, dividend distribution of 2, capital gain distribution of 3, divided by 10. Huge number. Okay, that's okay. Into 100, get the percentage answer. You will get a huge answer. That's okay. I have drafted the question that way. 30 minus 10, 250 percentage. 250 percentage. That's okay. The answer is huge. That's okay. Any doubts in this? This is dividend payout. Other option is dividend reinvestment, where this formula is not going to help us. Any doubts till this? Any doubts on this? Can we proceed? Any doubts on this? Dividend reinvestment. Dividend reinvestment plan, particulars calculation amount. This will be a longer calculation. Particulars calculation amount. Dividend reinvestment will be a lengthy computation. Amount invested. Amount invested. What's the amount invested? 1 lakh. Units allotted. Units allotted. When I invested this 1 lakh, I'll be allotted units. I'll be allotted units. And what is the NAV on the day I made the investment? 10. 1 lakh divided by 10. 10,000. Units allotted 10,000. Dividend and capital gain. Dividend and CG distribution per unit. Unit is like shares, okay? Unit is like shares here. And there's no difference between dividend and CG. We'll just club it together. I don't even like the word CG, but I can't help it. Questions will come with the word capital gain distribution. How much is the dividend and capital gain distribution? 5. Overall dividends. Overall dividends 5 into 10,000. Overall dividends in bracket in rupees. Overall dividends 5 into 10,000. 5 into 10,000, 50,000. Overall dividends is 50,000. Any doubts on this? Now, I am the MF. I'm giving you 50,000. You are returning back the same 50,000 and telling me reinvest at what NAV? What is this 20? It could be average of multiple periods. The reinvestment when happened, all we don't know. It could be that January month you reinvested, Feb month you reinvested, March month you reinvested, April, May, June, multiple reinvestments can be there. And there are exam problems. As we proceed, you'll understand that every time they'll give a separate NAV. So first reinvestment, dividend, the reinvestment NAV, get the extra units. So multiple calculations may have to be done. Here our reinvestment happened at what? 20. Dividend in bracket in units. Dividend in units. Dividend in units. Instead of getting 50,000 in rupees, I am going to get 50,000 in extra MF units. This will have a reinvestment NAV rate. What is the reinvestment NAV rate here? 50,000 divided by 20. 2,500 extra units got allotted to me. I was originally having some units and extra units are allotted to us. Originally having some units and extra units are allotted to us. Does this happen in practical world? Exactly same thing happens. Exactly same thing happens. Dividend reinvestment plan, if at all you opt for it. Any doubts in this? Only angle is tax deduction at source in the practical world. Any doubts in this? Closing units, 10,000 plus extra 2,500. 10,000 plus extra 2,500, 12,500 units. Any doubts on this? Closing is 12,500. Closing value, closing value, 12,500 units into 30, 3,75,000. To put it very simply, I invested 1 lakh. I'm getting back 3,75,000. I invested 1 lakh. I get back 3,75,000. I'm least interested on all the technical names. Only thing I know is money. Money is 1 lakh 375. Money went 1 lakh. Money came back 375, provided I sell it at the end of the year. If I don't sell, then next year I may sell it. That time we'll see the calculation. Any doubts on 375? In between, I don't get any dividend. I don't get any CG distribution. Nothing will come to me, and I'm okay with that. I am perfectly okay with that. Any doubts on this? Clear? Can we proceed? Now come down. Return is equal to what I get back minus what I give divided by what I give. I've got the answers in live online into 100. What I get back minus what I give divided by what I give into 100. And in exam, obviously, please don't write this. This is just for your understanding. Just for your understanding, because let's make the formula very simple rather than giving some technical names. I just want to make it very simple. This is easy to understand. Any doubts on this? Let's write the formula again now. What I get back is called closing value. Closing value minus opening value divided by opening value into 100. Closing minus opening divided by opening into 100. Into 100. Closing is how much? 375. Opening divided by opening into 100. 275 percentage. 275 percentage is the return earned by the investor in a reinvestment plan. In a payout, it was 250 percentage. Here it is 275 percentage. Any doubts on this? Clear? Can we proceed? Any doubts on this? I give you a minute just to absorb whatever we have done, and then I proceeded. 1 minute for you. Go through the concept. Let me know if there are doubts. Okay, there was a doubt on why is there a difference between the two returns. One we got 250 percentage, another one we got 275 percentage. Reason is this dividend I got, no, I reinvested at what rate? 20. So this 20 rupees, the 2,500 has now become 2,500 into 30 by the end of the year. By the end of the year, it has become what? 2,500 into 30. Indirectly, I earn income on income. The dividend which you reinvested how much? 50,000. But by the end of the year, this 50,000 has become 75,000. How 75? 2,500 into 30 rupees. Into 30 rupees, which is where you get extra return in a reinvestment plan. You're getting an extra return in reinvestment because when you reinvested at 20. By the end of the year, if this 20 remains 20, both will give same returns. Both the formulae, that is payout plan and reinvestment plan, will give you same answer. If the NAV remains same, reinvestment NAV and the closing NAV. But if the closing NAV goes up, there is obviously an extra return. Rare scenario, you reinvested at 20, closing is 17 or 16, in that case returns can go down. In that case returns can go down. What is go down? 250 in that payout. Reinvestment can be 240, 230, 220. It can be lesser, it can be more, depending on the reinvestment NAV and the closing NAV. Ideally, ICA should start testing questions around these, saying that whether a student understands the core concept or not. In an MCQ, I can ask you that I did a reinvestment at X rate and the closing rate is Y. Will the return under reinvestment be more or payout be more? These are the typical question which they ask in CFA, saying that this has happened. Which of these is the likely scenario? They may give 3-4 options saying that payout is more, payout is equal to reinvestment, payout is lesser. So accordingly we can do, but from an exam point of view they'll just tell you to calculate return. But because you have asked the doubt, I'll clarify the doubt. Reason is 250 became 275 because there is an income. There's an income on the dividend reinvested. Any doubts on this? Can we proceed? Clear? Anybody else has any doubts on this? Done? Can we proceed? Let's come to question 5. This ICI study material is covered as 3 different questions. Question 4, 5, 14. All 3 numbers will be different. So I will be doing this question at home. You may practice 5 or 14. Numbers will be different. Same thing, just for your satisfaction if you want to practice. I didn't want to keep all the 3 questions in this material because same question, just the numbers are changed. Okay, let's come to this. Mr. X, an investor, purchased 300 units of ABC mutual fund at the rate of 12.25 per unit 1 year ago. Over the year, X received 1.25 as dividend, capital gain of 1 rupee. You are required to find Mr. X holding period return. Holding period return, assuming that this no load fund has a NAV of 13 as on today. Mr. X holding period return, assuming all dividends and capital gain distribution are reinvested into additional unit at an average price of 12.50 per unit. What difference would it make in terms of returns available and which option is preferable by the investor? Go through this, 30 seconds for you. Go through the question. Okay, this question is nothing different from the MCQ which we discussed. In the MCQ also we did the same thing. Here also we are going to do the same thing. Why initially I may do both. I may do MCQ also and the descriptive question just to give you comfort. As time passes by, I may stop doing the MCQs. Sometimes MCQ I may not do. Sometimes I may not do the descriptive question because repeating the same thing doesn't make any sense. But this is just to give you comfort that any student who wants to revise should ideally focus majorly on the concept book and the difficult question which you mark. You have to mark. And ideally, when you do your marking, keep thinking about one more thing also. If something is not covered in the concept book and you find something extra, then do mark those questions because mostly everything will be there in the concept book. But sometimes you don't find some points in the concept book and you find that in a question because I cannot cover everything. I have tried everything to be there, but still some new things you learn, mark those as moderate or difficult questions so that you can revise. Keep one thing in mind, that how will you revise entire AFM in 1.5 days, which we are going to cover in 3.5 months. We cover it in 3.5 months. You need to cover it in 1.5 days. So keep that in mind always for any subject, every subject, because ultimately if you don't revise and go to the exam, you will struggle. Today, if I ask you to solve a question from CA Inter, most of you guys will struggle. Most of you will struggle because you don't have touch with the CA Inter now. So if I tell you to solve a very basic question from CA Inter also, there is a possibility of struggle. Not CA Inter. If you ask me today, solve a 10th standard maths problem, I'll struggle. I will 100% struggle. Differentiation, integration, all that I've totally forgotten. So if somebody tells me that you solve that, I cannot do it. When I was in 10th standard, I was comfortably doing it. But now doing it is very, very difficult. So touch is very, very critical. And staying in touch is where that concept book is. So In when they, as we pass forward, keep always in mind that how are you going to summarize my 3 hours in 10 minutes. 3 hours of my session should summary be 10 minutes for you. In 10 minutes you should be able to recapture whatever I have done it in 3 hours. That is what you need to keep doing for every session. If you do that religiously, and after your whatever, whenever you're writing your exam, that time open my book. I'll tell you one more thing. Whenever you open my book at later stage, initially you may not remember anything, because it's always, unless there is a touch with the subject, you will struggle to remember things. But if you have your own notes, if you have made your markings, it will become very very simple for you to recapture whatever you have done and complete. Because yesterday's session I revised in, sorry, the first session I revised in 3 minutes. It took me 3 minutes to revise it. Every session I can revise in 5 minutes, because I know everything what is there in the book. Like that you need to keep revising. So whenever you do your marking, keep that in mind. For example, this question, I don't find anything new. I've already covered it in that MCQ which we have done. So ideally, wasting time on this question during revision will not serve any purpose. So you understand which questions you learn something new, and accordingly do the marking. I mean, I'm again and again reiterating on this marking part, because initially I'll tell, later as classes progress, my focus will only be on teaching concepts. I cannot tell you all these points later. Initially I will spend a lot of things on general guidance. Please follow the general guidance very clearly. If you have not followed, go through any subject which you have completed and see how difficult it becomes for you to revise at the revision phase. Because at the revision phase, many students struggle is only this. Whereas at when you do your school or when you do your college, school and all, continuously touch with the subject. You are continuously touch with all the whatever subjects you are doing. So many tests, continuous touch, it becomes easy. But this year, that continuous touch is not possible. You cannot be in continuous touch with AFM till you write your exams. So which is why, make strong notes now itself. Let's get to the question now. Dividend payout plan. Dividend payout plan. Return under dividend payout plan. Okay, there's a word used called no load fund. What is no load? I'll explain later. Okay, some points I'll not be in a position to touch now itself. No load meaning you will understand later. As such, it has no implication to the question. Holding period return is equal to NAV 1, NAV 0, D1, CG1 divided by NAV 0 into 100. I've got the answer in live online. Okay, let's complete it here also. Into 100. NAV1, the closing NAV is how much? 13. Opening NAV 12.25. D1 1.25. CG1 1. NAV 0 into 100. 24.49%. This is what students have told me in live online. 24 point. Live online guys, everyone should try typing the answer please, because I can't see you. I want your participation in the chats. 24.49 percentage. Any doubts on this? Clear? Here when I did the calculation, 1 unit, 5 unit, 10 unit does not matter. Next, return under. Second part is saying Mr. X holding period return, assuming dividend and capital gain are what? Reinvested. Are reinvested. So we have done reinvestment. So that's called dividend reinvestment plan. Return under dividend reinvestment plan. I'll exactly repeat the same table. You can keep telling me the numbers. First is amount invested. Amount invested. Exactly the same points. Okay, amount invested. How many units did we buy? At what rate? 300 into 12.25. P675. 300 into 12.25. Exactly same thing we are going to write. No change in the format, nothing. 3675. Units allotted 300. Units allotted 300. Units allotted 300. Dividend and CG distribution is 1 and 1.25. So 2.25. 2.25 per unit. Overall dividends 300 into 2.25, 675. This is in rupees. 675. 675. All this 675 would have got reinvested. Would have got reinvested. At what rate are we reinvesting? We are reinvesting at the rate of 12.5. At the rate of 12.5. 675 divided by 12.5. 54. 300 plus 54. Ideally, I should not have solved this question. I should have told you to only do it. I will keep initial phase. As we proceed, you will see you will be doing a lot of work in the class itself. 354 units. Any doubts on 354? What's the closing NAV? Into 13. 354 into 13. 4602. We'll write our formula. Is there a doubt?
Yes, sir. Is it a 354 units or 348 units?
No, 350.
They call it the average units, right? The average rate, right? Average price nothing but is coming, is clubbing of all opening and then reinvestment, all the things, right?
No. So there is a doubt by a student that the average price of 12.5 is including opening price. No, it is not including opening price. Reinvestment, as I said, no, reinvestment will happen every month, every quarter. First month could be 12 rupees, second month could be 12.25, third month could be 12.5, fourth month could be 12.75. On an average, reinvestment happened at 12 rupees 50 paise. On an average, reinvestment happened at 12 rupees 50 paise. That is what we have taken as the reinvestment. That is what is considered for dividend in units.
Okay, got it, sir. I thought that is 3675 again 675 400 and something and divided by 12.5.
No, not
around the 348.
No, not that.
Thank you.
Holding period return. You know the formula. What I get back minus what I give divided by what I give into 100, or technically the formula is closing value minus opening value. Closing is what? 4602. Opening P675 divided by P675 into 100. I've got the answer in live online. 25. Okay, this is one calculation part. After calculation, ICI may ask which option is preferable by the investor. Technically, reinvestment is preferable. But logically speaking, I cannot give an answer to this because both are okay. Why both are okay? Because I don't know by the end of the year, reinvestment will be 12.5, closing can be 13, closing can be 12 also, 12.25 also. We don't know. So it is not necessary that reinvestment is always better. Payout can be better, reinvestment can be better. This is just like doing some analysis after the event is over. After event got over, now telling what is better doesn't make any sense. Because at the end of the year, I'm advising this. At the beginning of the year, if you ask me advice, I cannot give an answer. Because at the beginning of the year, Payout can be better, reinvestment can be better. I don't know. So, practical world decision is very simple. Do I need money or not? If I need regular money, I'll go for payout. If I don't need money, I may go for reinvestment. There are other options also. You'll understand as we proceed. Okay. So, in this question, from an ICI's answer point of view, I'll have to tell reinvestment is better. But logically speaking, any decision has to be done before the event gets over. Most of our exam question will tell you to take a decision after the event is got over, which is like that's not decision making. If you know what is going to happen in both and then making a decision doesn't make any sense. So here, write the answer. Conclusion: reinvestment plan, reinvestment option has higher return, has higher return of 0.73%, 0.73. This is the difference in return, and hence we should go for reinvestment option. We should go for reinvestment option. Again repeating, this is technically a waste of time analysis because it doesn't serve any purpose. This part doesn't serve any purpose. Any doubts on this? Clear? Able to understand this? Can we proceed? Any doubts on this? Okay, I'm not giving you time to go through the solution because it's the same question only. Any doubts on this? Again, you can keep putting a tick. Okay, keep putting a tick. Every question, initial 3-4 classes, I'll tell you to put a tick. Put a tick. You should get settled in that mindset, and then you keep putting a tick there. Okay. Any doubts on this? Done. Can we proceed? Okay. In the practical world, totally 4 types of plans will be given by a mutual fund. What is 4 types of plan is? When you create a fixed deposit, the bank will say interest can be reinvested and added to the principal. Interest can be paid out. So you have something called as interest payout, interest reinvestment in a fixed deposit by the bank. Like that, we had dividend payout, dividend reinvestment, but there are two more plans. They are called as growth plan and bonus plan. There are two more plans called growth plan, bonus plan. So practical world, 4 options are given. Whenever you invest in a mutual fund, for example, there's a mutual fund called Parag Parik Flexi Cap Mutual Fund. You invest in, they'll give you 4 options. You can go for growth, you can go for bonus, you can go for dividend payout, you can go for dividend reinvestment, your wish what you want to do. What is growth plan is very simple. Invest today, I will not give you any dividend, I'll not give you any capital gain, no reinvestment concept and all, no dividend, no capital gain. You start with 1000 units, end with 1000 units. Start with 1000, end with 1000. Practical world, just give me a minute. Parag. So they'll give a different NAV. There is a NAV for IDCW. IDCW is basically that dividend plan which I was talking about. The NAV is 94.7522. 94.7522, 4 decimal NAV. There is a growth which is 94.7524. In fact, there can be a huge gap and all. There is a limited gap here, but there will be a gap between the NAV for this plan. There will be a gap between the NAV for the growth plan, for the dividend payout plan. Reinvestment is technically payout, reinvestment is your wish, and there's something called as a bonus plan. What is growth plan is? You start with 1000 units, end with 1000 units. Today, I am a mutual fund investor. All my investments are in growth plan. Why? I don't need any dividend income. I don't need any distribution from the mutual fund. Why? I am a regular income earner. I am getting income from my classes here. I have some other practice which I am doing. So today, I don't want any income to be given by the mutual fund. Don't give me an income, have a headache of tax deducted at source, reinvest. I don't want anything. I don't want anything. If I don't want anything, I'll go for growth plan. I'll go for growth plan. What does a growth plan do? Zero declaration of dividend, zero declaration of capital gain. Nothing is declared by this plan. Nothing is declared by this plan. You start with 1000 units. If you are invested for 10 years, you will end with 1000 units. Start with 1000, end with 1000. Why are we people doing this? I will 100% do this in today's time period. When I'm a regular income earner, I will go for growth plan. I'll go for growth plan. Second, there's something called as bonus plan, which many mutual fund do not offer practical world because it has zero utility. What is bonus plan is, today you are invested in a fund, it is 1000 units into 50 rupees. If I do 1:1 bonus, it will become 2000, but value will become into 25. Units will double, NAV will become half, value will remain same 50,000. Value will remain same 50,000. Most of the MF does not offer a bonus plan. Reason, it doesn't serve any purpose. Why? Because in mutual fund, if you want, you can sell even half unit. You can sell 0.25 unit. So somebody who wants to sell, they can sell for any value. In case of shares, bonus helps. How does it help in share? Let's take an example. MRF. The share price today is around 1 lakh rupee. 1 lakh rupee. You are interested in MRF, but you will not buy MRF. Reason is 1 lakh is outside your budget. 1 lakh is outside your budget. I like MRF share. I like the company, but 1 lakh is outside my budget. Let's assume NAV of a mutual fund is 1 lakh. You can buy 0.001 unit of MF. You can even buy 0.001, 0.001, 3 decimal, 4 decimal also possible in the practical world. So in a mutual fund, if I want to buy MRF mutual fund, I can buy, let the NAV be 1 lakh. Let the NAV be, the purpose of a bonus plan is to reduce the NAV so that it becomes accessible to all people. That is good in a share. Many people are saying MRF to declare a bonus, declare a split. They are saying we will not do it because we are not interested in people who are not a serious investor. Because if 1 lakh rupee is there, you will invest in an MRF only if you are serious about the company. Otherwise, people will not invest in MRF share. So share price of MRF today is around 1 lakh. I like MRF share, but I am not able to buy it. Historically, TCS has done a lot of bonus. TCS has done a lot of split. Infosys has done. If they had not done, today the share price of TCS would have been 70,000, 80,000, 1 lakh, 1 lakh 10, 2 lakh. You cannot buy that. So bonus helps in case of shares. Bonus has zero utility. Zero utility in case of a mutual fund. Zero utility in case of a mutual fund. Today if I look at MRF share price, it is 1,52,000. 1,52,000. I am interested in MRF share. Again, I am saying I am interested in MRF share, but your budget is how much? 10,000 per share, 20,000 per share, and which is what major chunk of India's average investments are. It is not that with you. Many people will not be ready to invest 1 lakh in a single company. So if you want to buy MRF, MRF is saying we don't want you. We don't want you. If you are serious about our company, buy. Not serious about our company, don't buy. Not serious, don't buy. This is MRF example. None of the mutual fund will have NAV of around this 1 lakh and all. And even if it is there, again I'm repeating, even if it is there, it does not matter. It does not matter. Reason is very simple. You can buy what? Whenever you buy a mutual fund, you don't buy one share. For example, when I place an order for mutual fund, I place an order for 1,000 rupees, 10,000 rupees. I don't place an order for one mutual fund or two mutual fund. I place an order always for 1,000 units, 10,000, sorry, 1,000 rupees, 10,000 rupees. So in a mutual fund, breaking down the NAV does not make any sense. But still, in the practical world, some MF offers it, and obviously we have it in our ICA material also. We have it in our ICA material. So what bonus plan? MF will declare bonus, units will increase, and proportionately NAV will go down. Units redeemed on maturity will be higher than the units purchased on day zero. You purchase 1,000 units, but when you redeem, it can be 10,000, 20,000, 30,000, 40,000, any number. Does it make any difference? Technically, zero utility. Third one, which I've already explained, one is called dividend payout plan, and second is dividend reinvestment plan. What is payout plan? In a payout plan, I pay dividends to you. You start with 1,000 units, end with 1,000 units. Most important part is this: units purchased on day zero equal to units redeemed on maturity. Units redeemed on maturity will be higher than the units purchased on day zero. Units purchased on day zero will be equal to units redeemed on maturity, and here it's again going to be higher. Again, it's going to be higher. How is it higher? Last question: 300 units became 354. 300 became 354. Any doubts till this first? Any doubts on the concept? Practical world, if you really don't want dividend, then you can go for growth plan. If you want dividend, go for payout plan. Again, reinvestment is very rarely preferred by people, but offered. Mutual fund does offer it. Mutual fund does offer it, but again, rarely preferred by people. I have a payout plan. I have a reinvestment plan. What is reinvestment? You are saying, I don't want the mutual fund to give me dividend. The mutual fund is saying, if you don't want, why are you going with dividend reinvestment plan? Directly go with growth plan. In the growth plan, no dividends, no capital gain distribution. No dividends, no capital gain distribution. Bonus plan, the number of units will become double, triple, and NAV will proportionately go down. Dividend payout plan, NAV 1, NAV 0, D1, CG1 by NAV 0 into 100. And reinvestment plan, the units will change by the end of the period. Any doubts on the concept here? Four plans. I'll repeat again. There's a growth plan, there's a bonus plan, payout plan, and reinvestment plan. Practical world, most MF offer growth and the dividend plan, which can be payout, which can be reinvestment. That's your wish. Reinvestment has one headache in the practical world, which is your tax deducted at source. But still, people may prefer that. Reason is, if my income is less than 12 lakh rupees, I may prefer to do reinvestment. Reinvestment means every year you earn income. Growth plan means once you sell, you will earn a huge income. Growth plan is once you will earn the income. Dividend plan means every 6 months you will earn income, or every 1 month, every 2 months, every 3 months you will earn income. Any doubts on the concept here? Any doubts? Four plans are offered: growth, bonus, dividend payout, dividend reinvestment. In reinvestment, I'll have to do this calculation every time a dividend is paid. What is this calculation? Same thing which you wrote as column rows wise, now I'm writing it as column wise. There will be a date, opening units will be there, some dividend will be declared, multiply and get it as dividend in rupees, divide by the NAV, get extra units, get the total units, repeat the exercise again, repeat the exercise again, repeat the exercise again. Earlier you did it as a table like this. Now you will have to do a column wise table. Reason is not one dividend. You will see 5 dividends in a question. There are problems where we'll see 4 dividends and all. So what will we do? Date, opening units, dividend in percentage, dividend in rupees, reinvestment NAV, units allotted, closing units. Repeat the exercise, not one time, not 2 times. You may repeat 3, 4, 5, 6, multiple times. You have to repeat. Multiple times you have to repeat this exercise. Clear? Able to understand this? This is reinvestment. Bonus plan, same thing. There will be units in the beginning. Some bonus ratio will be there. Some bonus units will be allotted. Closing units will go up. Again repeat the same exercise. Again repeat the same exercise. How many ever times they declare bonus, you have to repeat this exercise. If they do 1 time, repeat it once. If they do 2 times, repeat it twice. If they repeat 3 times, do it 3 times. Any doubts on this? One important part, there will be a different NAV for growth plan, different NAV for dividend plan, different NAV for your bonus plan, which is very logical, because in a growth plan, as an investor, I don't get any income, so my value will be on the higher side. NAV will be on the higher side. Bonus plan, units will double, NAV can become half, quarter, depending on the data. And in a reinvestment plan also, NAV is going to change. Any doubts on this? Any doubts on this? So 4 options, practical world: growth plan, bonus plan, dividend payout, dividend reinvestment. Growth, bonus, dividend payout, and dividend reinvestment. Growth, technically, if the units opening and closing is same, I can use a formula called NAV1 minus NAV0 D1 CG1 by NAV0 into 12 by M into 100. I can do that, or I can do a detailed calculation. You'll understand when I do a problem. Whenever units change, what I get back minus what I give divided by what I give into 12 by M into 100. Any doubts till this? Any doubts on the concept? Clear? Okay, let's take a break of 10 minutes. Okay, let's proceed with the discussion. So we have learned there are four types of plans. Let's see a question around this. It's a very lengthy problem which we are going to do now. It may take away around an hour today. Let's go through this question now. Sun Moon Mutual Fund sponsored open-ended equity-oriented scheme, Chanakya Opportunity Fund. There were three plans: dividend reinvestment plan, bonus plan, and growth plan. At the time of new fund offer on 1/4/1999, Mr. Anand, Mr. Bachan, and Mrs. Charu, three investors, invested 1 lakh each and chosen B, C, and A plan respectively. History of the fund is as follows: date, dividend percentage, bonus ratio, NAV, which is different for a plan A, plan B, and a plan C. On 31st July, all three investors redeemed all balance units. Calculate annual rate of return. Consider long-term capital gain exempt from income tax, short-term capital gain subject to 10% income tax, securities transaction tax of 0.2% on sale or redemption of units. Ignore education cess. Go through the question. I'll give you a minute. You just read through the entire question once. A minute for you. Okay, I'll explain the question again. There are three people who are investing. First thing we need to be aware of, word called open ended. May not be critical to solve the question, but still you need to be aware. Now, practical world, there are two types of mutual fund. One is called close ended, second is called open ended. If you want, you can make notes on this, but otherwise your wish. Okay, close ended and open ended. What is close ended and open ended is, open ended means entry, exit at any time. Entry and exit at any time. What is entry and exit any time is, today I buy the mutual fund, tomorrow I redeem it, day after tomorrow I buy it, again I redeem it, buy it, again I redeem it. My wish. Okay, I buy it and I redeem it. This is called open ended mutual fund, where you can enter and exit at any time. In an open ended mutual fund, your entry and exit will be directly with the MF. What is directly with the MF? You pay the money to MF, they'll give you units. You ask, return the units to them, they'll give you money. Close ended is entry, exit at specified time. What can be specified time? Every month end, every quarter end, every year end, or today the close ended scheme will start and it will get redeemed on 31st December 2030. Till that period, don't come back to me. Till that period, don't come back to me till 2030. Till 2030, I am not going to do anything. Can this get tested? It got tested, not in exam. In one MTP, they tested this in the form of an MCQ question in a case scenario. In a case scenario, they ended up testing this understanding, where they were asking what type of an MF can you enter at any time, exit, something around that was a question. Okay, so open ended, entry and exit at any time. Close ended, entry is okay, entry also only once, exit also, that there are timings decided. It could be every month end, every quarter end, every year end, or one time entry, one time exit. Now there's a problem with this. Problem with this is, I invested in this MF and suddenly I don't like the MF. I don't like the MF, but MF is saying don't come back to me. Normally, if you don't like the MF, you go to the MF, tell them you want to redeem, they'll give you the money. So this mandatory to list. It has to be listed in stock market. This has to be listed in stock market. Any close-ended scheme has to be listed in stock market. If it's listed, I will sell this MF and you will buy the MF. You will buy the MF. Instead of company doing it, there will, instead of the MF doing it, who will do? I will sell it, you will buy it. That is called close-ended scheme. In a close-ended scheme, entry and exit will not be with the MF. Entry and exit will be through your friends. You sell it, your friend buys it. Well, when I say friends, basically you will do a trade in the market. You will do a trade in the market. How will you do a trade? You will press your buying price, he will press his selling price. If the price matches, trade will happen. Like you buy a share, you will buy and sell a mutual fund for close-ended scheme. Mandatory listing. It is mandatory that you have to list this. Why is this mandatory? Because in case I get stuck, what will happen? Because I need money after 1 month. You go to the MF. MF will say nothing doing. Our scheme is a close-ended scheme. In a close-ended scheme, don't come back to us. So there are open-ended schemes, there are close-ended schemes. Both are there. The price in the market, it is like price, not NAV. It is called price in the market. The price will match more or less the NAV. The price will match more or less the NAV of the mutual fund. Can there be a deviation? Yes, significant deviation can be there. If at all, I give an example. Latest, if you have tracked silver prices, if you have tracked that, you will understand that silver has been highly volatile over the last 3 months. There was a time when the NAV was 50, but people, because of the craze for silver, pressed a buy order even at 60, 65, 70 and all. That was a craze they had, and they wanted this MF at any point, at any cost. I wanted the MF. So instead of 50 being the NAV, I pressed a buy order at 55, 60, 65. All that happened in the market. NAV is declared by the mutual fund every day. Every day they'll declare. When I showed you this chart, you will see every day NAV being there. 26, 1st, 2nd, 28th, 27, 26, 25, 24. Any trading day, NAV will be declared by the mutual fund. NAV can go up, NAV can go down. This is for a open-ended scheme. Close-ended also same NAV they'll declare. They will declare the NAV, but close-ended there'll be a trading happening. Trading will happen in the market. When trading is happening in the market, you may see the trade could be slightly higher price, slightly lower price. Why is this trade happening? Trading happening because you entered into a mutual fund today and suddenly you are not liking the mutual fund. Suddenly you are not liking the mutual fund, or there's an emergency money needed. If you need emergency money, open ended, you can exit anytime. You can enter anytime, you can exit anytime. Close ended, the doors are closed. The doors are closed. The entry doors are also closed. The exit doors are also closed. It will open every month end, every quarter end, every year end, or it may open once, close once. That's all. Entry at one time, exit at one time. That's all. Nothing else. Nothing else. That depends on the scheme. Every close-ended scheme has to be listed in the stock market. It has to be listed in the stock market. Is this understanding needed for the problem we are solving? Not needed, but still better to know these terms. Okay, open-ended scheme, entry and exit, entry and exit at any time. Close-ended scheme, your entry and exit at a specified time. There is a doubt by a student. MF in silver means, will the MF invest in silver? Yes. There's something called as a silver mutual fund. What is silver mutual fund? You buy silver mutual fund, they will take the money and go and buy physical silver. They'll go and buy physical silver. Gold mutual fund, they will take money from all of you and buy physical gold. Buy physical gold. There is a gold mutual fund, there is a silver mutual fund, there is a commodity mutual fund. Whatever the commodities which are well tracked in the market, the MF may enter into any of them. Clear? Any doubts on this? Any doubts on the concept till now? Can we proceed? So coming back to the question, I have invested. I have. Is there a doubt? Sorry, somebody live online. Is there a doubt?
Yes, sir. Yes, sir.
Yeah.
Sir, sir, for closed-ended mutual fund, you said it is listed in the markets.
Correct.
So isn't it traded every day so that that can be sold and made money, unlike open-ended fund?
Sorry, is it?
That is, it can be sold in the secondary market and liquidated, no, sir, whenever cash is
Yes,
required.
yes, correct.
We don't need to go back to the mutual fund house.
Yeah, you need
whenever
not go
required.
back.
Okay. Then that is also liquid, no, sir, as open-ended fund.
Correct.
Both
But
are
it is
almost.
okay. So there is a doubt that the close-ended scheme, is it a liquid scheme? Liquid means can you exit anytime? Yes, but the exit route is different. In open-ended, the mutual fund will give you the exit. Close-ended mutual fund is not giving. That is why AMFI is saying, Association of Mutual Funds of India is saying, you have to list so that you can get an exit. The purpose of listing is only to give you an exit. Otherwise, open-ended is not listed. Open-ended is not listed because exit is given by the mutual fund. Exit is given by the mutual fund. Close-ended, you cannot get exit. You cannot get exit from the mutual fund. That is why it is mandatory. It has to be listed. It has to be listed. There's another doubt. Monthly SIP. If there is a monthly SIP, it will come under open-ended scheme. It will only come under open-ended scheme. Why open-ended? Because monthly means every month you are entering into the mutual fund. That entry is given only under a open-ended scheme. Close-ended scheme may not give you entry every month, every quarter, every, it depends. Well, the fund will tell you, but exits, entry and exit is limited there. Any doubts on this? Can we proceed? The purpose of listing, again I'm repeating, the purpose of listing is I want to make it liquid for you. What is liquid? Ability to sell. Ability to sell, because you purchased it, suddenly you have an emergency, you need money. That money has to come from somewhere. No, that money is going to come, that money is going to come by selling your units, by selling your units. Any doubts on this? Can we proceed? Clear? Able to understand till now? Okay. So let's first do the analysis of Mr. Anand, right? Computation of return. Computation of return of Mr. Anand. Working note 1. Computation of return of Mr. Anand. Mr. Anand. You tell me in bracket, Anand has invested in which scheme? Payout, reinvestment, growth, bonus. Which one he has done? Okay, in bracket, bonus plan. Bonus plan. Note 1. Computation of units on maturity. Units on maturity. 5 columns. Date, opening units, bonus ratio, bonus units, closing units. Our opening units and closing units is not going to match here. So that is why we are doing the units calculation. Date, opening units, bonus ratio, bonus units, closing units. Calculation and all is going to be simple only, but ठीक है. When is the first bonus declared in the table? How many bonus are totally declared? 3. So you have to do this, then you have to do this, then you have to do this. 3 analysis you have to do. First write 31/3/2004. Bonus ratio 5:4. 31/3/2008. 1:3. 24/03/2009. 1:4. 3 bonus are declared. Is the screen stuck, guys? Live online, guys, can you confirm? Is there any issue with the screen? 5:4, 1:3, 1:4. Is it fine now? How much did I invest in the mutual fund? 1 lakh. Any NAV they have told when you invested 1 lakh? Any NAV they have told when we invested? When did we invest? 1/4/1999. They have given NAV for 28/7/2003 onwards. If they don't give anything, your NAV is the face value. If they don't give anything, your NAV is what? face value. If they don't give anything, if they give, please follow that. Okay. So when I purchased, I purchased at the rate of 10 per unit. I purchased at the rate of 10 per unit when I entered. So opening units 1 lakh divided by 10. This is my start. My start is 10,000. My yep.
This is assumption, right? 10 rupees is the face value.
Yes, correct. No, given face value is given in the question. Face value of rupees 10. Assumption is if nothing is given, it will be at face value. Any doubts on this? What is the bonus ratio? 5:4 means 5 units extra for every 4. So in this 10,000 into 5 by 4 extra units, 5 by 4, 12,000. Closing is 22,500. 22,500. Bonus calculation is going to be fairly simple. Okay, 22,500. Any doubts on this? Next opening is 22,500. Next is 22,500. 22,500 into what? 1 by 3. 7,500. 30,000. Once you have understood one calculation, it's just a formality beyond this. $30,000 into, which is 7,000. So I entered with 10,000 units, exit with 37,500 units. Exit with how many units? 37,500 units. Any doubts on the number? Clear? Can we proceed? Done. Note to computation of return. Particulars calculation amount. Okay. Now for return calculation, formula is what I get back minus what I give. The problem is what I get back is not very simple. There is something on securities transaction tax. There is something on short-term capital gain. So you need to consider all that and then get what you get back. What I get back normally is closing units into closing value. Last question we did that 354 into this. Last question we did not do any extra headache on top of it. Now when you redeem, you have to pay securities transaction tax of 0.2%. Securities transaction tax of how much? 0.2%. This is a extra tax I need to or outflow for me. After that, there can be any short-term capital gain. As per your income tax, when is the redemption happening? When is the rate of redemption? 31/7. Any units allotted in the last 1 year. Any units allotted in the last 1 year will have short-term capital gain implication. Any units allotted in the last 1 year. Last 1 year. What is last 1 year? From 1st August 2008 to 31st July 2009. If you see the calculation, we got one allotment in this period. 24/3/2009. We got one allotment in this period. What is that? 24/3/2009. Any units allotted in the last 1 year. Last 1 year will have short-term capital gain. Today, the problem can become more complex. What is more complex? Even long-term capital gain is taxable. In today India's context, even LTCG is taxable. In that case, if ICI wants to, they will ask you to calculate capital gain for every sale you do. Capital gain for every time. What is every time? Opening 10,000 units you are selling now. What is the capital gain on that? What is capital gain? Sale value of this 10,000 units minus the purchase value of this 10,000 units. Then this 12,500 calculate capital gain. This 7,500 calculate capital gain. This 7,500 calculate capital gain. More than a year, pay LTCG. Less than a year, pay STCG. If they want to complicate, I don't think ICI will get into that much complication, but if I want, I can ask you to calculate capital gain for every transaction, because when you sell 37,500, this 37,500 came to you by opening 10,000, which is around 10 plus years, that is long term capital gain. Something got allotted in 2004, which is 5 years, again long term capital gain. Something got allotted in 2008 March, more than a year, long term capital gain. And 24/3/2009, that alone is short term capital gain. Any doubts till this? Any doubts on this? Now, under your income tax, when you calculate capital gain, is securities transaction tax a deductible expense? You'll have to tell me. I am not a tax expert. Securities transaction tax. Guys, you'll have to tell me. You would have learnt it at deductible. I'll get a shock. It is not a deductible expense, guys. You'll have to be careful about this. STT is not a tax deductible expense for computing capital gain. So when I calculate my capital gain, in that capital gain calculation, securities transaction tax will not be shown as a deduction for calculating capital gain. Only for calculating capital gain, your securities transaction tax taxation impact, STT is not a tax deductible expense for computing capital gain. Doesn't, it's nothing to do with our subject which we are doing. Okay, it is all to do with your what you learn in your income tax. Okay, and bonus units, the cost of acquisition will be taken as 0. For bonus units, it will be taken as 0. So whatever is the sale value of the bonus units is the capital gain. Whatever is the sale value for bonus unit, that will become what? Capital gain. This is something to do with your income tax, nothing to do with AFM. Okay, nothing to do with AFM. Reason I have written it here, I don't know. I have asked this question every batch. Every batch I get at least some wrong answer saying that STT is a tax deductible expense. Don't know. I really get a doubt when I ask this question. I'm not a tax expert, so sometimes I get a doubt whether I know it correctly or not. So STT is not a tax deductible expense for your calculation of capital gain. It will not be a tax deductible expense. So I have to calculate capital gain. I have to calculate tax on capital gain. Tax on capital gain. Any doubts till this? Any doubts on this? Bonus units, cost of acquisition is 0. And for your capital gain computation, securities transaction tax will not be considered as a deduction. Any doubts on this? Now let's get back. Right, sale value, sales realization, 37,500 units, 37,500 units into the NAV of this plan, bonus plan, plan B, 22.98, 8,61,750, less securities transaction tax at 0.2%. You can round off and write the amount, it will not make any difference. $1,724. Securities transaction tax 0.2% on sale or redemption. When you redeem it, you will have to pay this. I redeemed it through the MF itself. 1724. Any doubts on this? It said 0.2% on sale or redemption. Purchase, there is no securities transaction tax. Practical world, purchase can also have. Here it is only sale or redemption. Less tax on STCG. Tax on STCG. Tax on STCG. 7,500 units into 22.98 minus 0. What is 0? 0 is the cost price. Minus 0. 0 is the cost price. 22.98 minus 0. Minus 0 is not needed, but just for your understanding. Why we are doing this minus 0? Because if you had to calculate the first investment, no, you want to calculate capital gain 22.98 minus 10. Minus 10. What is the tax rate for capital gain? No, capital gain tax rate. Subject to 10% income tax. 10% income tax. 10% income tax. $17,235. Clear? Any doubts on this? 17,235. Any doubts on this? Net realization for your understanding, what I get back. What I get back. Ideally, I should have got back the first number itself, but there are two expenses here. What I get back. Let me know the number. How much? 8 lakh? 791. What I get back? 842,791. 842,791 is what I get back. Any doubts on this? Clear? Amount invested. In bracket, what I give. Amount invested, what I give. 1 lakh. We'll use the formula now, but before that, I just want to write one more item. Any doubts till this first? Clear? Period of investment. Can you calculate and tell me how many months or years is our period? Calculate it properly. Months or years. 1/4/1999. Starting with 1/4/1999. How many months or years is my investment? Starting from 1/4/1999. Give me the answer in number of months. How many months is the investment? 124. 124. I invested when? 1/4/1999. Till 2009 is 10 years. Then April, May, June, July. 10 years and 4 months. 10 years and 4 months. Why are we doing this? Because I want to calculate annual rate of return. Question has asked, calculate annual rate of return. Calculate annual rate of return. That is why I'm writing the period of investment. Period is how much? 124. This is 1/4/1999 to 31/7/2009. 124 months. 124 months. Starting from 1/4/1999 till 31/7/2009. Any doubts on this? Annual rate of return. What I get back minus what I give divided by what I give into 12 by number of months into 100. 842,791 minus 1 lakh divided by 1 lakh into 12 by 124 into 100. I've got the answer in live online, 71.88%. All the three schemes will more or less give similar answer. Any up and down is technically a wrong drafting by ICI. It's technically like a wrong drafting. More or less very close to each other it will be. All the three schemes, more or less you should get a very closer answer. Variation, if at all, could be because of one, capital gain taxation and the reinvestment rate being little different. And the third is they have given NAV, no, that could have been little better. It may not be the right reflection of the NAV. 71.88%. Now, in this calculation which I have done, I have done exactly the same formula only. What I get back minus what I give. Only problem is previous to previous question when we were doing, we started with the first question today where they said 20.06, 20, 0.03. You just applied the formula. Now I am saying I'll make it little complicated for you. You do extra calculation. What is extra calculation? One units calculation. Apart from units calculation, the second difficulty I want to add on is capital gain and STT. Any doubts on this? Can we proceed? Clear? Done. First person is done. Can we proceed? Working note 2, computation of return of Mr. Bachan. You'll have to tell me which plan he has invested in. Growth plan. You are going to do the answer. I'll explain, okay? I'll explain and give you some 4-5 minutes, okay? I'll explain and give you some 4-5 minutes. Any doubts first? You are going to repeat. Listen for a minute. This table. Only change here is sales realization 10,000 units. No extra calculation. You need not do any extra computation. It is exactly 10,000 units. Can I do NAV1, NAV0 formula and get the answer? Yes, but only problem is STT and STCG. That is the extra headache here. So you are going to put it in this format. What is the format? 10,000 units into, what is the NAV of growth plan in the last? 82.07. I'll give you 2 minutes. You are going to do it, okay? STT you do. STCG may not come. Reason? No units allotted in the last 1 year. It was allotted 10 years back. So no STCG. Net realization could be different. Amount invested. Put it in the format. I give you around 4 minutes. Around 4 minutes. I'll discuss after 4 minutes. Okay. 10,000 into 82.07. 8,20,700. Every question which I tell, I want you to solve. 100% solve it. But the only thing is, unless you experience on your own, you will feel everything is going very smooth. But when you do on your own only, you will understand the difficulty. What is 10,000 is 1 lakh divided by 10. What is the STT rate given in the question? 0.2%. 8,700 into 0.2% is 1641. This was the number. I'm rounding it off. Little surprised. Many students, not one. I could see 4-5 students writing 16,414. Writing 16,414. Live online also you could have done. I never expected this mistake will happen because this is the first time I'm giving, and when I went for rounds, I could see not one. I've seen 4-5 notebooks. What will happen? You will feel, sir taught us. Same question came in exam. I have done everything perfect. ICI only doesn't give me marks. I do everything perfectly, but ICI never gives me marks. This is your feeling is like that. And what you have done, you have made a small error. It's a small error, but obviously they will not award marks beyond this. They will not award marks. This is one thing. Another student, instead of writing 1641 in a hurry, wrote 1614. 1614. This is again a small mistake. That small mistake ICA sometimes may ignore. 1614 they may ignore, or they may deduct marks for that. But small mistakes. This 100% I never thought that, because when I do in the class, I'll ask you, you will write along with me. This is just a proof for you that what students think is that when I do it in the class, everything looks okay. When I try on my own, I make mistake. It's okay, perfectly fine. But that does not mean you stop trying. So I will give you like this, not only in this, every class there will be at least 10-15 minutes your time is basically you will have to do something. Every class this will happen, not only this session. As we proceed, there can be some sessions where I may give you 30 minutes also, saying that you do this part, I'll discuss after you are done. I can do everything. I have no problem in doing the entire solution also. But when I do on my own and when you do at your end, you will understand that there are mistakes being made. Clear? Any doubts on this? 1641. One advice to you, whenever you are subtracting something, write it as minus or write it in brackets. If you don't do it in a hurry, instead of subtracting, you may add it in a hurry. Okay, I leave it to you. If you're confident, no problem. But presentation, ideal is either put it in brackets or write minus symbol, so that when you put a total, you are clear. Otherwise, in a hurry, you may end up making mistake. Two mistakes I could see with most of the notebook. Okay, this is no tax there. What is the amount after deduction? 8 lakh 059. Amount invested is 1 lakh. Period of investment 124 months. Our calculation is going to be 819,059 minus 1 lakh divided by 1 lakh into 12 by 124 into 100, which is answer is 69.59 percentage, which I think most of the students have told me in live online. You could have also got it here. Only request is, when I tell you to do something, my 100% sincere request to you is you try it. Students who even later may watch in recorded mode also, any mode you do, recorded, face to face, live online. When I tell you to do something in recorded mode, I tell students to pause the video, do the calculation. Why this is needed is, unless you practice on your own, you will not get grip with things. This, there was nothing there in this, because I could have told this is nothing, let's ignore it and then proceed ahead also, because there's nothing there. But when you do on your own, unless you give that practice, you will not understand where you're going wrong. Can we proceed? Any doubts in this? Working note 3.
Sir,
Yeah.
one small doubt.
Hmm.
Sir, in the working note one, we considered the price. I mean, the cost of bonus shares as zero.
Hmm.
Sir, but actually, it is like when the bonus is paid out, the share price gets split
Correct.
between the number of shares and the number of quantity of shares increases.
Hmm.
Doesn't it? The share still has a cost, sir.
Okay, so there's a doubt from a student saying that bonus units, whenever a bonus is paid, your existing NAV become half and bonus is paid. So is there a cost attached with the bonus unit? We will just go with income tax definition. Income tax definition says cost of acquisition is zero. We'll have to go with that only. Technically, is there a cost for bonus unit? Yes, there is a cost even for bonus unit, but that doesn't matter. Reason is, we are doing it for the purpose of calculating short-term capital gain, which will go as per Income Tax Act. As per Income Tax Act, whatever is there, let's follow that. So under Income Tax Act, cost of acquisition of bonus units, in fact there is a specific date. Before that date and after that date, they have given certain rules. Let's not get into more on tax discussion, but cost of acquisition of bonus units is taken as zero as per Income Tax Act. Is there a cost associated with? Yes, bonus units also have a cost, but that does not really matter for us. Any doubts? Clear? Can we proceed?
Thank you, sir.
Computation of return of third person. Mrs. Charu, what is the plan they have taken? Okay, dividend reinvestment. This will involve a lot of calculation. This is the only plan which involves a lot of calculation. Let's open the format which was shown to you earlier. I think I may need some 7-8 columns. I don't remember the number of column. Date, 7-8 columns. Okay, date, opening units, dividend rate, dividend in rupees, reinvestment NAV, units allotted, closing NAV. Date, opening units, dividend rate, dividend in rupees, reinvestment NAV, and closing units, not closing NAV, sorry, closing units. Last column is closing units. Closing units. At home, you will have to do the examples which are given below that concept. Okay, same examples will be there. How to calculate units: date, opening, dividend rate, dividend in rupees, reinvestment NAV, units allotted, and closing units. Let's write the dates on which dividend is paid. 5 dividends. Okay, huge calculation. 28/7/2003. 20% NAV on that date, which is plan A, which is the reinvestment plan A. Okay, 30.70. Write this: 20%, 30.70. 31/3/2004. 70%, 58.42. 31/10/2007. 40 percentage, 42.18. Copy the 5 dividends which are declared. It is a time consuming calculation. 15/3/2008. 25%, 46.45, and the last one is 24 3 2009, 40%. They have given this NAV history of other plans, no, that has no utility. They have given it for all the three plans, the NAV history. That has zero utility because I don't do any reinvestments there. It's the same calculation. Last time we did once. Now we are going to do it 5 times. When we do 5 times, obviously grip will improve for us. Any doubts first on this? Start with opening units. 1 lakh divided by 10. 10,000. 10,000. What is dividend in rupees is 10,000 into face value. Dividend rate is multiplied with face value. Dividend yield is multiplied with your NAV. Will multiplied with your NAV itself, or basically the purchase price. Basically the price, whatever is the real price there. Okay. Now write 10,000. What is the face value? Into 20%. 20,000. We'll keep two decimal calculation. It's not given in the question. Let's keep it as two decimal. Units can be in decimal in the practical world. Again, I'm repeating, it can be in decimal. I'm an MF investor. I get 3 decimal units and all in the practical world. So you can do 3 also. I think solution has done 2. Let's do 2. 20,000 divided by 30.70. Point. Closing is 10,000 plus 651. 10,651.47. 10,651.47. Any doubts on the numbers here? Clear? The exercise will get repeated multiple times. Next, opening 10,651. 10,651 multiply with 70% into 10 rupees face value. Dividends can also be 2 decimal. 70.29. Extra units 74560.29 divided by 58.28. Closing 10,651 plus 1276.28. 11,000. 7. And now listen. I'll be doing 2 types of practice in the class. One is I'll tell you to do it. Second, now also you are only going to do, but I'm going to do it in the screen. You should not look at the screen. We are going to do it together, but you should not look at the screen. Beyond this, you do in your notebook. I do it in the screen. Take some 3-4 minutes and then you check your answer. Okay. I don't see any doubts coming in, but still, if you have a doubt, refer. But don't refer without having a doubt. Okay. Don't just say I want to check every time. Don't do all that. You complete and then refer the screen. You do it. I'm also doing it. Do it and then check. Okay, I've got the answers in live online, but yeah, you guys complete it. Beyond the first one, it is just technically waste of time. Well, we are doing the same thing. I'll wait till 1 or 2 more minutes. Any number greater than 5 in the third decimal, round it off to the higher number. Just make sure all that you do properly. Basic math, you take it properly, because some students have told answer is 14906.16, some have told 17, some have told 15. The difference in live online, I've got these answers. The reason is you're rounding off. The rounding off, if not done properly, can lead to small variation. Would that really matter? Depends on ICI's evaluation key. If they go very strict, 0.16 and 15 also, they may not, I don't know, I'm again saying they may not award marks. If they go lenient, then even 14906.16 and you're getting 14906 or 907, that also they may award marks. It all depends on how strict they want to go in evaluation. Any number 1131.13 we got. If it's 125 something, round it off to the higher number. If it is 124 or 134, then round it off as 13 itself. Please take care of the third decimal rounding off properly. This is what you should ideally get. If anything is wrong here, you can let me know, because I've also just done the calculation now. Any error if you find, you let me know. Otherwise, this should be the answer. 14906.16. Now this is a time consuming calculation. Time consuming calculation. Any doubts on this? Clear? Can we proceed? Done. Okay, there is a doubt by a student. Should we consider discount rate for calculating annual return? That is called considering time value of money. Whatever return we have calculated, we ignore time value of money. What is with time value of money? You will understand, maybe not today, maybe in the next session. Next session, you will understand with the time value of money. With the time value of money is called internal rate of return, IRR. I'll explain that maybe tomorrow. I don't think so. Today we'll have time to discuss that. Any doubts on this? Can we proceed? Clear? Done. Any doubts till this? Next, same table. Return computation. Return computation. As of now, we are ignoring time value of money in the calculation. Return computation. Sales realization, STP, tax on STCG, net realization, amount invested, period of investment, annual rate of return. In the computation, time value of money is ignored. Reason very simple, to make it calculation simple. Otherwise, you will have to do IRR, which is a time consuming calculation. Can we start? 14906.16 into what is the NAV of this fund? 53.75. Round off and write the amount. 8 lakh 1,206. 801,206 into 0.2%. 1602. Amount I'm rounding off, it will not have any material difference. Units and NAV we are keeping, NAV anyway is given in the question 2 decimal. Units also we have kept same 2 decimal. Any doubts till this? When are we selling the fund? 1st July, 31st July. Look at this table. Any units allotted between August 1, 2008, August 1, 2008 to 31st July 2009. Which one? Last one. Last one alone, what happened? We got allotment in the last 1 year. Last 1 year, between which period? August 1, 2008 to 31st July 2009. As per income tax, for a reinvestment, this is technically the cost. For the reinvestment plan, this is technically the cost for computing capital gain. For computing capital gain, this is taken as cost. Whichever year dividend is paid and reinvested, that dividend is taken as income. And whenever you sell, this amount is taken as cost for the purpose of capital gain to avoid double taxation. It is considered as cost for the purpose of capital gain computation. 48.10 is the cost. Whatever units allotted in the last 1 year, will have STCG. If question wanted LTCG, very time consuming calculation, because first 10,000 cost is 10, next 651 cost is 30.7, next 1276 cost is 58.42, next 1131 cost is 42.18, next 702 cost is 46.45, and last 1144 cost is 48.10. So now tax on STCG, 11 into 53.75 minus 48.1 into 10%. No securities transaction tax deduction. STT is not a tax deductible item. How much? 647. From a practical world point of view, every time dividend is paid or reinvested, all that year you will have to pay tax on your dividend. All that years you will have to pay tax on your dividend. Under Income Tax Act, that dividend is an income, and when you calculate capital gain, you allow that as a cost. In the capital gain, it is like I paid dividend, you reinvested the dividend by giving me the money back. Net, what is the net realization? 798,958. Amount invested 1 lakh. Period 124 months. I've got the answer in live online. 67.64%. Beyond this, I really don't have anything to explain. 798,958 minus 1 lakh divided by 1 lakh into 12 by 124 into 100. In this entire computation, we ignore time value of money. If you consider time value of money, the return could be around 30-40% only. It will not be 67%. If you consider time value of money, the return could be on the lower side. How is that calculated? You will understand as we proceed. Any doubts on this? This question, if you want to do IRR, you will not be able to do. In your notebook, you can't do. In Excel, I can do. In your notebook, you can't do. Why and all, I'll explain later. But even if you want to try, you cannot get it. Clear? Any doubts till this first? Any doubts on this? Okay, I'm giving you first 1 minute. You go through the entire solution. Thereafter, I'll be explaining again, and then I have some more points to explain, and then we end the session. So, I give you a minute. You go through the entire solution. Let me know if there are doubts. 1 minute for you. Okay, I'll quickly summarize the question. We had three plans. Growth plan, very simple calculation, same units at the beginning. So directly we did this table. We did not do units computation. In a bonus plan, you'll have opening units, there's a bonus ratio, there's an extra units allotted, there's a closing. Should I do once, twice? It can be multiple times, it doesn't really matter. Whatever number of times is never my worry. I'll have to keep doing the calculation for the number of times given in the question. This is one part of it. Then we also understood that there is a reinvestment plan, which is a little bit time consuming calculation. You will have date, opening units, dividend rate, dividend in rupees, reinvestment NAV, extra units, and closing units. You will have to repeat this multiple times till the number of times they have given in the question. For return calculation, formula is what I get back minus what I give divided by what I give into 12 by m into 100. This formula ignores time value of money, and I'm aware of it. It ignores time value of money. How is time value of money considered and all, you will see later. Clear? Any doubts till this? Any doubts in any of this? Okay, I hope you have done the marking. Now what I want you to do is question 7. At home, you will, this is a homework question only. I even the previous batches I used to give us homework only. You have to complete it. You have to complete what I did in the class. What I did in the class is basically calculating return using what I get back minus what I give divided by what I give into 12 by m into 100. Tomorrow I will be explaining something called as IRR approach, which will be my discussion tomorrow. But for that to happen, you should complete this question at home. What is completion? Getting the units. After the units, getting the return calculation. How will you get return calculation? Sales realization. No less, all that will not be there. Securities transaction is not there. All that is not there. But you need to complete the entire table. You will have to get this return is not given. Okay, this return 3.9%. You'll have to complete what I get back minus what I give divided by what I give into 12 by m into 100. This part you have to complete. If you are not completing, then it will be just waste of time tomorrow for you when I explain the IRR approach. I'll be explaining only the IRR approach. This is fully a homework question only. Earlier batches and all, I never used to discuss it. But for IRR approach, I want to discuss it. So at home, you need to go through the question, do the same calculation. I think there are some 4 dividends, 3 bonus, 1 bonus plan will be there, and 1 dividend plan will be there. And I think they have given NAV on the date of purchase, everything is given. So you do your calculation at home. After you complete the calculation, calculate your return. In return calculation, you will not have securities transaction tax. You will also not have short-term capital gain. So those two headache will not be there. Without that, you need to calculate return. After you are done, there will be another answer called IRR approach, which is what I will discuss in the next session. I don't want you to go through the IRR approach part. No need to spend time on the IRR approach part, but you need to 100% do this and come. If you are not doing it, it will be just waste of time. Okay, initially you will waste time in the class because initially I'll discuss only this answer. And if there's anything tricky, I wouldn't give you as homework. I know what is there in that solution. So you need to 100% practice this at home. In our classes, we'll have 3 types of practice. One, which you do individually at home, where I'm not sitting in front of you. Why this practice is needed? Reason is in exam. In exam, I'm not there in front of you. So you will have to do it without me also. At least this question I'm explaining. Sometimes I'll give you homework without even any explanation. You try. Struggle with your answer. I have no problem students struggling with the answer. Not able to do. Don't look at the answer. Not able to do. Don't look at. Send me a message in WhatsApp. I'll clarify your doubts. I'll clarify your doubts. But you need to give it a try at your end. At your end means at your end. I said every class I want 1 hour from you. That 1 hour, 30-40 minutes, something like this will take away. Okay. This question will at home, when you do, it will take you 30 to 40 minutes because you are just starting with the chapter. If you are well aware of the chapter, it will take you maybe 20 minutes. Okay. So initially it may take time. It's okay. It's okay. Spend time, make mistakes. Spend time. After you're done, check the answer. If you have made any mistake, you understood the mistake, don't send me a message. You have not understood the mistake and you still have a confusion, send me a message in WhatsApp. Again, I'm repeating, I want this to be done at your end. Once you are done, next session, I'll be discussing IRR part. Second type of homework which I'll give, where I'll not discuss the entire answer itself. This I have to do IRR, so I'll discuss in detail. Next type, I'll give you homework. Next session, beginning I discuss the homework. Beginning I discuss the homework. Now that is a benefit as well as a disadvantage. Benefit is some students who do the homework will find it very useful. Students who have not done the homework, they do two things. They start coming late, saying that anyway, first 5 minutes he'll only discuss homework. I don't want to be there in the class. So please don't get into that habit. You be there in the class on time. When I discuss homework, you should have done the homework. You should have done the homework. You should have done the marking after your homework also. Will I do every question in the class? No. There are my material has some 500 plus question. At least 70-80 question I'll tell you to do at home. Not much, but at least some 15% of the question I want you to do at home here, as well as MCQ. MCQ I'll not discuss in the class. MCQ I'm not going to discuss in the class, but descriptive I'll be discussing. So at home, do this. So this is one type of practice which you need to do at home. Second and third practice, you already got used to it. One is every class I will remain quiet for some time, which is technically rest for me. I'll keep going rounds. Check your notebook. Live online I cannot check, but you will comment your answer. So that is the second type of practice which you are going to do. And third type of practice is I will tell you that you do. I also do it on the screen. All these three practices mandatory. Okay, all these three practices 100% mandatory. Students somewhere at some stage start thinking that why is he making us to do everything? Why can't he do on his own? I can do every question. I have no problem. Today itself, some of you have got a proof that when you do on your own, what mistakes you make, and when I do, you will feel, oh, everything is going very smooth. The entire chapter looks smooth. That is how it will be, because I am guiding you. When I guide you, it may look very simple. When you do on your own, you will make mistakes. Clear? Done? Okay, let's revise what we have done till now. In today's session, I started with the return part only again. In the return part, we learned that return is equal to what I get back minus what I give divided by what I give. If it's a payout, NAV1, NAV0, D1, CG1 by NAV0 into 100. And if it's a reinvestment plan, closing value minus opening value divided by opening value into 100. If you do into 12 by M, that is technically called as your annual return. Without 12 by M, it is called holding period return. Holding period return. Now, some exam question may ask you to calculate period of holding. What they will do is they'll give you holding period return. They'll give you annual return. Balancing figure. Balancing figure is your period of investment. Balancing figure is your period of investment. The formula is your annual return. Annual return is equal to holding period return into 12 by M. M is the period of holding. This can become a balancing figure. This has come in exam. M can become a balancing figure. How will you calculate M? M is equal to, don't look at the formula there. Don't look at the formula. Understand only one formula. What is the formula? Annual return is equal to holding period return into 12 by M. Into 12 by M. Dividend payout plan, paid in cash. Dividend can be in three forms: dividend rate, dividend yield, dividend payout. Rate is multiplied with face value, yield is multiplied with NAV or market price, and payout is multiplied with earnings per share, which you will see in the security valuation part. Paid in cash, same formula. If you're not paying in cash, what I get back minus what I give divided by what I give into 100. Then there are four types of plan. There is a growth plan, there's a bonus plan, there's a payout plan, and there is a reinvestment plan. Growth plan, very simple. Opening units, closing units remain same. No change in the number of units. No change in the number of units. Bonus plan, units will keep doubling. R will become 1.5, 1.8. It will keep changing, and NAV will keep falling. Multiplied together, you will get almost the same value, and almost the returns will be same under all the three plans. Dividend reinvestment, you'll have to put it in our format where we will get extra units allotted. Every analysis you have to do. For this, you have question number 7, which you can do at home. Question number 8, which you can do at home. That's your wish. 7 and 8, two questions are there, examples. Okay. And I also discussed about close-ended scheme. Open-ended scheme, entry and exit at any time. Close-ended scheme, entry and exit will be at only specified time. That specified time, because of that, it has to be listed in stock market. When it is listed in stock market, if you are buying or selling, you cannot buy and sell at NAV. You can buy and sell at the price which is prevailing in the market, at the price at which it is prevailing in the market, which obviously will be different from NAV, slightly up, slightly down. You can go through this example. There is an example below this. At home, practice the examples. Okay, practice the examples multiple times. Then taxation impact for bonus units, cost of acquisition is taken as 0, and STT is not a tax deductible expense. Effective yield is what I have to explain in the next session, where IRR and other things will come into picture, because some of you have asked me about time value of money. We have ignored time value of money till now. Clear? Any doubts on this? I'll end with this then. Thank you, friends.